Welcome to the PropTech Podcast. It's Kylie Davis here, and I'm delighted to be your host as we explore the brave new world where technology and real estate collide. I passionately believe we need to create and grow a sense of community between the innovators and real estate agents, and sharing our stories is a great way to do that. Now, the aim of each episode is to introduce listeners to a PropTech innovator who is pushing the boundaries of what's possible and to explore the issues and challenges raised by the tech and how they can create amazing property experiences. And my guest in this episode is Domonic Thompson, National Head of Real Estate at Macquarie Business Banking, one of the country's largest and certainly most engaged bankers to the real estate industry. And Dom has more than 15 years experience in banking in the real estate sector and has been a driver behind the Macquarie Real Estate Pulse Check. And that's a regular survey of the real estate industry that has put data behind what excellence looks like in the industry since 2007. Now, the Macquarie benchmark provides data to show how agents are typically performing both nationally and at a state level across a range of metrics, including the size of their businesses, commissions, rent rolls, profitability, and revenue. And over time, this has created an extraordinarily detailed picture of what success looks like in real estate in Australia. Now, Macquarie were about to release their 2020 report when COVID hit, and so the whole thing got caught up and you may not have heard about it. But there are some extraordinarily valuable findings in there, and I feel really privileged that Dom's here to run us through the highlights. So here to tell us all about it, Domonic Thompson, welcome to the PropTech Podcast.
Thank you very much for having me. It's great to be here.
No worries. Great to have you on board. So when we start an interview on the PropTech Podcast, we always do an elevator pitch. So going to put you on the spot and ask you what the Macquarie elevator pitch is in the real estate and PropTech space. What do you do? What problems do you solve?
The elevator pitch, geez, it's been a while since I've heard that term. What do we do? We're very privileged at Macquarie to have had such an engagement in the space for such a prolonged period of time. So we've been banking professional services firms and specifically real estate agents for about 35 years now. So we've got a large number of clients, in excess of 2,000 clients across the country that we've been helping for a long period of time, and obviously over that period of time have utilised the insights and the relationships to build out bespoke, tailored products and services to the market. But beyond just the products and services, I guess because we're in a privileged position, able to share insights around high performance trends and how we see the market moving forward. So it's a very fortunate position that we're in, and hopefully that's enough of an elevator pitch for us.
That'll do us. Yep, that's cool. So tell us a little bit about you. How long have you been at Macquarie for?
So I've been at Macquarie for about 13 and a half years now. I started with Macquarie in the Perth office at that point. I'm now in Brisbane. I've been here for the last three and a half years. So out of that 13 and a half year career, I would suggest that 13 of that has been in the real estate space. So I've been an account manager managing clients. I've been a business development manager looking at the growth of our business. I've had some responsibility for looking after some of our offices, and now I'm looking after the real estate segment as a whole, which incorporates both the residential and the commercial space for Macquarie's interests.
Fantastic. So the reason I wanted to get you on the show was because I wanted to talk about the latest benchmarking report and the perspective stuff that came out before, well, just as COVID hit, didn't it? So it's kind of got a bit lost, but I was having a read of the report and there's some fantastic stuff in it. So tell us a little bit about the report and the data. What's come out of it?
Sure. So it's interesting to reflect on the survey. Macquarie's got a proud history of delivering insight through benchmarking and pulse checks, and this is probably our sixth or seventh iteration over what's now a 10-year period. Always great to see what's going on and support the anecdotes and observations of what we see with some data. Excuse me. So we actually brought the pulse check to market at the back end of last year, and we were ready to release at the beginning of this year, but obviously COVID hit, and we turned our attention to looking after our clients and very much focused on our clients and providing them with tools and resources to help them navigate what's clearly clearly, obviously, still a current situation. But as we've done that, we've realised that whilst we put PulseCheck on hold, there were certainly some reference points in what PulseCheck and benchmarking was showing us that we could relate to. So that's why we're now bringing PulseCheck to market a little bit later than we thought. What's it telling us? Look, three key trends for me. One is that there continues to be a downward pressure on both sales and property management commission. I won't get caught in the numbers for the purposes of our catch up, but the trend is still downward across both sales and PM. The second trend is that property management is growing in importance. We've seen effectively a doubling of portfolio sizes of properties under management over that 10-year period that we've been conducting this survey. So we've gone from about 350 on average back in 2009 to about 750 now. So seeing that really grow and scale and consolidate through. And as that goes forward, we're also seeing the percentage of overall revenue that's coming from property management also continue to increase as well. So there's a lot more investment of time, resources in property management as part of the traditional business model. And finally, I guess it's that profitability and revenues continue to come under pressure. And it's hard for any business to maintain a consistent, improving profitability or revenue line. So as part of that, we actually singled out high-performing agencies and looked at some of the characteristics of those and how some of those businesses really looking to buck the trend across all of those sort of metrics and really dig deeper into that so that we could share that with the industry and certainly with our clients.
So let's explore that a little bit, because like Macquarie Bank, you guys are quite high-end banking, I guess, and so you would be servicing probably some of the bigger end of the market or the top end of the market. Is that true, or is that a bit of a suburban urban myth?
Look, it's an interesting observation. I think we've never taken an elitist approach to market. Our clients range from ABC real estate startup right through to relationships with some of the corporate franchises across the country. So we pride ourselves on our ability to take clients on that journey. I think if we were to and to also make the point that we have varying degrees of relationships with clients. There might be some that we're purely helping out on a transactional basis and helping them with payments and streamlining the likes of accounts receivable. And then we've got those that we've got more comprehensive relationships with, that we're not only providing products and services, but we're helping them on the journey about planning and looking to the future of what the future of real estate might look like. I think it's fair to look on average and say, well, what does a Macquarie client look like? And typically they do have larger properties under management. I think across our book, probably around the region of around 700, which is actually the industry average as it related to the PulseCheck survey that we had. Many may argue with that, but from our respondents, from our survey late last year, 750, as I mentioned before, was the number. So they typically do have more scale, but that's usually an end result of being part of a journey. And our clients tend to think more strategically about the services that they offer and what their business looks like than think about it tactically.
Yeah, cool. So it is, however, the most comprehensive survey of real estate businesses and what they're going through, though, across the country, isn't it? So even if I'm not a Macquarie customer, the data that you guys are pulling out is still probably relevant to me as a business, or there's stuff I can see in that and learn from.
Exactly.
Yep.
So it was the highest engaged survey that we've ever conducted. We had 731 respondents. We don't get the granular data about who specifically. Yep. We get data around geographical splits and obviously the data that's meaningful to report back. But I can't tell you how many of those were clients and or prospects. But I think just given how long the benchmarking report has been in the industry and obviously the high regard that many hold it in, I think we do tend to get a lot of engagement for people that may not be clients, but we certainly hope at one point that they will be.
Yeah. Cool. So the three trends were pressure on sales and declining commissions, property management becoming increasingly important, and then and an impact on profitability. You guys also have a reputation for being quite across and engaged in the prop tech community. What are some of the things that the prop tech industry can take out of those three key trends? What does that mean for us?
Yeah, look, I think when we looked at high performing businesses, agencies, there certainly was a trend to an increased tendency to lean into the prop tech conversation and an engagement of tech solutions. So I'm trying to remember the numbers specifically, but high performing businesses, I think, had at least one more. And again, we're reporting on average against the prescriptive number, which, as I say, wasn't exhaustive. So there was high-performing businesses were typically utilising more tech than those other agencies that maybe weren't performing under those higher metrics. And when I talk about high performance, we were typically looking at businesses that were generating greater than 20% profitability, turning over in excess of $1 million, and had a really strong focus and mindset around adaptation. So it's no surprise with that adaptation mindset that they are utilising more technology. But I think it's more than just that. It's not just a propensity and an appetite. So it's almost an excitement around using and trying and making mistakes and learning along the way, which I think is going to be a real critical characteristic for any business moving forward, regardless of real estate. But we're obviously talking real estate today, and we're also mindful that real estate has been on a journey for a period of time around technology, and it's really been the current backdrop that's driven a real strong acceleration towards tech, which is great. And I think many businesses from recent experience will realise that maybe tech isn't as fearful as I thought it would be about embracing and the change management, and not to obviously underplay change management, the importance and how much effort goes into it. But I think many businesses are learning that tech's actually not something to be as fearful of as they once were, and they're seeing the benefits both across their business, with their staff, and with their clients as well.
So is it fair to say that the tech that these high performers are adopting are across those three key categories, or those three key insights? So looking at technology that can certainly improve their profitability or automate and make things more efficient, improving their performance of their property management team, and then also looking at other revenue or ways to offset the downward push on sales commissions.
Yeah.
What are you seeing?
I think it's fair to say that we're all starting to understand that there's a number of different lenses by which we need to look at technology, and clearly some of it's around efficiency and what it can do to help lower cost to serve. But as we get a greater appreciation for the employee experience and the correlation between the employee experience and the client experience, I think we're starting to look beyond the numbers to see the actual benefit of using technology as an enabler. But yes, it's definitely. I think the more that tech is driving efficiency, it's removing process and automating things that should have been, let's face it, automated many, many years ago, and having people more focused on delivering the wow and the relationship, and not simply processing bits of paper or inputting data and the risks of that, let alone the onerous aspect on role descriptions, where it's not exactly necessarily the most enjoyable part of anyone's day. I just think there's a greater sense of appreciation that looking at technology to provide solution can have many forms by which you look at it in the first instance, but the many benefits that might come out of it certainly go beyond what the initial interest of that is. So it's certainly help. I think property management, to your point, we're all aware that property management is a very sort of onerous part of a business. There's a lot of heavy fixed overheads that are in there, typically around headcount, but not limited to headcount. And no surprise that that's where a lot of technology has been focused. So people are starting to outsource and automate. Some of that's been forced through the likes of social distancing recently. But again, having done that and seeing that, okay, well, the client experience hasn't been impacted. My staff are telling me that they love the fact that they didn't need to go out and do that, or it made it easier. Okay, so what do I now do with this person? Because I can now use them to do other things that maybe are more enriching than what they were currently doing. Maybe it's more aligned to their skill sets or their desires, and makes things more interesting. So I'm excited about how numerous ways we can look at this, and that people are starting to look at it through a different lens than just simply than simply a cost out sort of process.
One of the things I love about the report is looking that it makes that connection and I think puts some data behind this idea that the technology is actually a leadership issue now. That it's about how your curiosity as a leader and your interest in your business actually often helps you lean into tech solutions because you're looking at constantly solving problems in a better way.
Mm. Yeah, it's interesting. I mean, we look at tech, but I think you can put it under the banner of innovation. And when we asked the industry to report back on what some of these barriers to innovation were, time was the most critical factor. And it's hard to find time when you don't have anyone specifically accountable to driving that agenda. So I think certainly another I think characteristic of high-performing businesses is having extended leadership teams and extended number of people by which you can drive accountability to metrics that contribute to success. So appreciating that there are many, many businesses out there that are sole proprietors that are probably trying to pedal fast and do everything. I think it's incumbent on them to look at their team more broadly and establish a leadership team that can help drive some of these agendas and drive accountability. But for those that do have the privilege of a broader, potentially equity ownership within their business, it's really exciting when you can see different skill sets come in and drive all of these different agendas that can help take the limitation of time away, because you've actually got people, that's their key role. And I think if it's not someone's key role, it needs to be part of someone's role, because if you're not driving accountability to it, it's simply going to fall by the wayside. And that speaks not just to innovation in the likes of technology and the likes of technology, but I think anything that you're trying to drive within a business is having that accountability to it.
Yeah, absolutely. And now let's hear a word from our sponsors. For almost 16 years, Direct Connect has made moving easy for over 1.2 million renters and homeowners by arranging connections to a wide range of services, from electricity and gas to internet and pay TV. With a national team of local account managers who are experts in the industry, Direct Connect are there to support your real estate business with competitive rewards for every successful connection, plus an industry-leading rewards program. The connection process is simple, and Direct Connect's always-on guarantee ensures your customers will be connected on the day they move in. Direct Connect offers a range of market-leading suppliers, and Direct Connect has now made it even easier than ever to send connections, directly integrating with MRI Software's Property Tree. So in just a few clicks while processing a tenancy, you can send the connection details through and get your customers connected. To make the right connection and find out how Direct Connect can make moving easy for you and easy for your customers, visit agents.directconnect.com.au or call 1300 558 169. So based on the data, Dom, what was proportion of the industry are high performers that you guys are seeing?
So out of the sample survey that we had, so out of the 731, utilising the characteristics that I outlined before, it was around 15% that fitted that sort of mould of turnover and profitability and mindset. So I think that's a fair representation. I think many of the industry are certainly still on a journey and looking for some clarity and guidance around what the answer is. I think we all just need to get comfortable with the fact that there isn't a specific answer, but at the same time, we need to all be doing something. And that something can differ from business to business, because at the end of the day, I think when we view tech more as an enabler and as a passport to the future, that's going to be the core foundation that everyone will look as a base case for operating. It's then going to be, okay, how do we build the value proposition on that to really differentiate ourselves? And I think if we take that mindset into the journey, we'll appreciate tech is just the inevitable component. There'll be elements of that we will plug and play as we navigate the future. Plug and play, I do think, is the future. It's not a case of having the same mindset that we've typically done in technology of saying, here's my partner and that will be my partner for the foreseeable future. I don't see any need to change that in the next 5 or 10 years. I think, great that we're seeing the incumbent tech stack improve and innovate, and that's driven a lot of the innovation in the industry. It's not necessarily that people have done something different. It's just that the current tech stack is improving. But I think we need to be open to the fact that we will be plugging and playing different modules for the foreseeable future around, okay, well, that doesn't work for me anymore, but this new and shiny, or this, maybe it's an existing incumbent that's just developed ahead of other competitors in that specific field. And that's where business owners need to be focused on what their business needs to look like and how they'll build that architecture with these different components. And that's why it's going to need some accountability.
Yeah, and that creation of the architecture, or that building of the plan as to what you need from a tech point of view, that really does come from its heart at your vision for what kind of service you want to offer and what kind of employer you want to be, and your whole business philosophy, doesn't it?
Exactly right. Right.
No, I get really excited about this. It's like, finally, it's not a tech problem, it's a human problem. It's a leadership human thing.
It's a great point, Kylie. I mean, vision and strategy, I think, is so critically important. It always has been, but I think now more than ever, when we're navigating these uncharted waters, and I say that not just through a COVID lens, but this transformational piece that I know you and I have had numerous conversations about over several years, and it's just that COVID has accelerated, a real drive and push to address some of this transformation by pure necessity.
Yeah, well, it gave us a whole lot of time suddenly, didn't it?
It did, and it stopped us from engaging face to face and having to put wet ink on paper, and it just forced a heap of people to all of a sudden find ways to get things done quickly. So it's amazing how much more productive we've become through COVID, through necessity again, because we've had to get things done. Whereas we always thought we were working hard, but we're probably realising we can work harder as long as we don't burn ourselves out, which is another agenda. But back to your point on vision and strategy, so critically important. Another element that came out of the pulse check when we were asking our respondents to rate the importance of certain attributes for success and high performance, and vision and strategy was a component of that. The industry rates the importance of vision and strategy really highly, the highest. It's what's needed to be able to be successful. And yet on self-rating, probably one of the poorest metrics that the industry rates itself. So yes, we get that vision and strategy is really important, but in terms of doing it, we're probably not where we should be, and there's some room for improvement there. And some other interesting elements that came from that was execution as well. So if you think about vision and strategy, and obviously there's numerous decisions that need to be made on a daily basis, numerous decisions a day that will need to align to this broader vision and strategy that you're bringing your team on. Again, execution, pretty important. Self-rating, pretty poor. So I think there's a real opportunity to focus on certainly those two elements, and there was a few more that were referenced in the report. Okay, we're going to need this vision and strategy. We need to get off of the hamster wheel, get off the dance floor, up onto the balcony, and just have a little bit of balcony time to think about what this is all about, where we're going, and the journey that we're taking people on. To make sure whether our team are up for the journey and they like the future and what this might look like, because it will probably involve new role descriptions, job descriptions, and accountability. But also to ensure that the decisions that we're making around the likes of the tech that we're investing in, et cetera, are aligned to the long-term plan, and that the partners that we're partnering with are in working in conjunction with that and in harmony with that agenda.
We're seeing a real shift change at the moment, aren't we? And I think this is one of the kind of astonishing times that we're in, that we're moving away from this idea that there is one person who is the boss, who is the head of the business, who has to make all the decisions and have all the answers, to moving to and one tech platform that does everything or does things your way, to moving towards into an environment where we are much more collaborative, much more open to making people accountable and sharing, responsibility, and recognizing that we don't necessarily have the answers. And at the same time, the technology is basically more open API connected, pushing solutions to the people who are best able to solve those problems, rather than one person being that key, commander at the top, responsible for everything. So my question, because that was a bit long-winded, sorry about that. But my question in that space then becomes: so, what is the role of franchises in this space? Is it in that leadership conversation, or these new skills around strategy and vision, or what should the franchises be offering to their officers?
I think there's a lot that business owners would be looking to franchisors for. I think there's a real opportunity to demonstrate value in this sort of environment. Again, I'm talking not just COVID, but just the broader transformation, because there's so many different, I wouldn't say agendas, but there's so many different things to be thinking about, whether it's my tech stack or whether it's how I improve CX, whether it's how I improve EX and the types of people that I want to recruit, so recruitment, whether it be marketing, whether it be building out ancillary services. Clearly for businesses of scale that can, and it's not just limited to businesses of scale, but for those that have larger businesses where they can direct accountability for a lot of different things to different individuals, that's easier than it would be for the majority of the industry that still, to your point, struggles with sort of limited leadership scope outside of potentially one individual that's just done everything their way. It's just the way it's always been. And let's face it, it's worked. And on that basis, if nothing's broken, I don't need to change that. And I'm not saying that there's not a relevance in the future for those businesses. There certainly will be. But it just depends on, again, the vision and strategy of, well, what do I want to be? Is that what I want to be, or do I want to be on a journey where I want to take my business on a journey of growth and look at it through a different lens? And in order to do that, I need to think differently about how I drive all these agendas within my business and potentially look to empower people through accountability and obviously some transparency. To help that as well. So back to your question, I think there's real opportunity, and arguably it's playing out where franchisors can deliver great value to their businesses around a lot of competing agendas. I think the challenge is which ones do they focus on and which ones align with the agenda of their franchisees.
Yeah, okay. And so look, we've had the Australian market has been extraordinarily challenged, not just through COVID, but actually over the last 12 months. Because when we look sort of back to March last year, we were coming through the election. Transaction volumes have been down for a really long time. Do you think that's made us more resilient as an industry? Do you think we've kind of been coping or dealing with this for a while?
Yeah, definitely. Look, I take my hat off to all of the business owners there that have, we obviously had an unprecedented period of growth in Australia. We were very fortunate for a long period of time and saw a lot of success within the industry during that time. And then we had, 2000. I think we held our first Perspective conference back in early 2018, and literally, as soon as that concluded and we talked about all this wave of challenge that might be coming.
And bang, it happened.
Bang, it happened. And it was the tightening.
You conjured it.
It was, we predicted it. That's what we're going to say. So we didn't realise at the time exactly what would be the straw that broke the camel's back, but it was very much around the tightening of lending restrictions that was really trying to prevent this bubble that was happening on the East Coast in the investor market. But it clearly had a significant impact, to the extent where we saw the back end of FY18 into FY19, and basically that financial year really just be a mess for a lot of people. Volume significantly down, and people needing to adapt. So people were having to make some hard decisions and get accustomed to business performance that they just weren't accustomed to. Numbers down materially. In some instances we were seeing up to 50% down year on year from a number of our clients. And then middle of FY19, we saw the general election and things picked up again. And we saw that play through right to the beginning of the year. We saw it really play through to Christmas, and people were wondering what would happen when we came back, and we saw it continue until COVID hit. So, yeah, I think there's a lot of resilience that's been built in. For me, people are still needing to make harder decisions now than they did during FY19 because this has been sharper. And hopefully there's some early signs of optimism already coming through. But I think some of the decisions that people were able to get away without making during 19, they've now had to make early. in order to ensure that there's liquidity in their business to carry them through what's inevitably going to be some quieter months, certainly in June, July, August, I think from a cash flow perspective, because we've seen that obviously the volumes over recent weeks diminish. So that's where we hope that our clients are focused, and the market more broadly is on that liquidity. And look, if you can make it through the last 18 months, you build up a fair amount of resilience. What I simply hope is that resilience transitions into building a business and re-establishing a business that's more built and robust as it relates to that volatility, which is outside of everyone's control. So how do we look to really ensure that we've got that resilience in our business so that we know what levers we need to tweak when we need to if volatility comes through again? And or how do we continue to build up the cash flow of our business to make it as less exposed to sales as we possibly can? Now, everyone's got a different agenda around that, and I'm not suggesting that everyone needs to, but we're certainly seeing a lot of businesses continue to drive up what we call fixed cost coverage ratio. That is the percentage of their costs that are covered by recurring income, and being less exposed to trying to cover costs by making sales. There'll always be, there will typically always be a gap, but many businesses are on that journey, certainly looking to lower cost to serve, be efficient, to ensure that sales is more focused around profit and not cost recovery.
Yeah, we're now in a period, aren't we, or a time where the idea that you could start up a real estate business and just last from uptick to up, good market to good market, and just kind of hope that the bad markets kind of get out the way, is no longer a business plan. That you need to be actually really resilient and squirrel away the money for the bad times, and to actually have a business plan and strategy and vision that recognises that it's not if winter comes, it's when winter is going to come, and it will be here again. So to really make the best of it while it's there, but run your business really tight all the time, not just when times are tough.
Exactly, and obviously with varying degrees of experience in the market, there were many that pre-FY19 really hadn't seen anything like that before, but albeit there's also a number of people that had been around running well-established business for a number of years that, okay, well, this just happens and we'll get through it and everything will be fine. And I think we all had that view of everything will be okay at some point. But it's being prepared and ensuring that you know what to do within your business to adapt to that specific point in time. So I think there's a couple of themes here there's one around adaptation for the longer term, but there's also the ability to adapt for any given set of circumstance that you might need to navigate potentially on a shorter term basis. So some people adapt with the longer term plan and don't need to kind of deviate away from that because they've factored in volatility into their business and are more resilient through building up recurring cash flow and income and being less exposed to sales. That doesn't mean they're purely property management only. But there are also those that have probably got a greater sense of appreciation for, okay, well, I know what I need to do in my business if my income level is either here or here. And understanding what you need to do is half the challenge. I think it's fair to say there was a lot of conversations that we've had in the market where people just simply didn't know where to start. And certainly as it relates to the work that we've been doing in recent months with COVID coming through, and we could see what the pain was going to be and where the pressure would come in coming months around cash flow, was just getting people early to start thinking about where are you going to make the changes. That's one thing. And then it's, okay, so what's the timeline here? And from my experience, having worked through Perth in the resources kind of boom bust, I remember seeing a number of clients that got their head around the decisions that they had to make, but it's inevitable. Well, it's not inevitable. It's interesting to see how long people will potentially put that off as long as they can. Whereas we know making those decisions early can ultimately, give you put you in a better position moving forward than delaying those inevitable choices.
As a real estate agent, you need to be doing more content marketing. But creating posts for social media, creating videos and reports is hard work, lots of hard work, and it takes time. So that's why you need Home Prezzo. If you're a typical agent posting 1 or 2 social media posts a week, HomePrezo can save you between 75 to 100 hours a year. How many more properties could you sell if you had that time back? HomePrezo can help you create engaging, informative videos about how the property market in your local suburb is performing. Plus, it makes creating suburb reports, rental videos for landlords, and social media infographics an absolute piece of cake. If you can type in a suburb or type an address, you can create a Prezo using HomePrezo in just a few minutes. Listeners to the PropTech podcast receive a 14-day free trial. Now that's twice as long as the normal free trial. So go to homeprezo.com.au and click the sign up button and use the code PropTech to get your extended free trial, or click the link in our show notes. There's 2 things I want to talk about. One is that because I remember from the 2016 report that you did or something, one of the findings that struck me was that when times are good and when you're making an awful lot of money in real estate, one of the findings from that report was actually that doesn't actually mean you're in a good state, that your business is being brilliantly run. You could see that in the data, that there was a lot of businesses in that report that were seemed to be creaming it in terms of revenue, but their profitability was really low. And so it talks to that piece around needing to actually understand what's going on really underneath the hood of your business, and where you're spending the money, and whether it's getting your costs down and that impact on profitability. Do you think that's what our lesson from COVID has been, to actually really understand what's going on in our businesses?
Look, I definitely think there's a greater appreciation for the cost structure of the underlying business, and there's probably still too many businesses out there reporting on a consolidated P&L basis and don't really understand, well, what's the profitability of PM, what's the profitability of sales, and whilst one might look good at any point in time, sales as an example, that can quite easily be eroded. And then if that does happen, how does my property management business stack up on its own profitability? So the fact that many business owners have had to really kind of get the gloves on and gloves off and delve into my financials, my financial position, both within my business and personally, understand what pressure I'm potentially putting on the business personally, what's going on within my business, and things that I'm paying for that I didn't even realize, subscriptions that I'm not even using anymore. And probably realizing, how lazy and sluggish elements of the business are. I think there will be a greater sense of appreciation for the financials. Many businesses will now start reporting separately. We see majority of high-performing businesses, or if not all of them, reporting separate profit centers, not only for their business around sales or PM or any other aspect that they've got, but they're also drilling down to the individual property manager within property management, the individual salesperson within sales, and understanding, A, what that person is costing me, that goes way beyond just a comm split, but looks at all the other ways that you're supporting those individuals. And also within property management, okay, well, I'm paying my property managers a similar amount, but yet they've all got portfolios of different asset values and income and profitability. So is it fair that I'm paying them all the same on the basis that each of the portfolios is dropping me out a different level of of income? So I'm not saying, I'm not proposing a single answer to any of those problems, but I think going through the process gives you a greater understanding of how the business is actually working on a day-to-day basis that will enable us to, not from that greater appreciation, make better informed decisions on A, what our business looks like moving forward, B, but also when things change, where we've got some opportunity to lower a cost to serve a client, automate and make things easier to serve a client so that we can use the headcount to be more focused on revenue generation or cost management than simply conducting a process which, obviously in most instances is driven by legislation and regulation. But as we see that evolve and be more embracing of tech solutions, that will only help us empower our people to delight our clients, and from that generate more revenue opportunities.
Cool. And so you said that in this report too, it states that basically the size of a typical rent roll has pretty much doubled. That we're seeing bigger rent rolls. what we've also seen in the PM space, or during COVID, we've seen that people can work from home, and in PM especially, with the dominance of women in that part of our industry, this is going to open up, I hope, more job opportunities or more flexible career structures for PM, especially if you're managing on outputs and accountability rather than clocking in and off into the office. What do you, like, let's sort of play this out a little bit. What do you think the future of, are we going to see offices, we're going to see a bigger split in the industry of offices that have got their act together, that know how their businesses are running and are becoming mega offices that are much more professional and well structured compared to the sort of mum and dad shop things? Do you think we're at that kind of point where we're starting to break away from the mid-size average office?
Look, to a certain extent. I mean, clearly the current environment is accelerating a number of different agendas, and work flexibility is certainly one of those where we've all had to embrace it. I'm in my 11th week of working and living under the same roof, which poses its challenges. But
you got the COVID crazies.
COVID crazies. So, I mean, there's certainly silver linings to these dark clouds, and I look at it through a Macquarie lens and know how we're talking within our business, and we will not go back to doing things the way we've always done them. Clearly, there'll be certain elements of our business and the way that we go about it internally that will remain the same. But I think we've all got a greater sense of appreciation for the fact of less travel time to work. For me, less jumping on a flight numerous times in a month, and what that can mean, not just for inefficiency at work, but also the home life as well, and consuming the time. So I think when we start to look at some of these benefits, it does lend itself to, okay, well, what does this mean for empowering staff at home? What does this mean potentially for small businesses being able to be set up and working remotely? And I definitely think that there's a place for that, but also for these larger businesses that could arguably be more efficient, more profitable by taking up less floor space and empowering their teams to work away from the office, which many have already been doing. But I think not only are we seeing the productivity is maintained, but more importantly, if not equally as importantly, if not more importantly, we're seeing that our staff are loving it. So I think what we're seeing is that typically staff are loving it. They still want the connection, and we're probably more connected than we've ever been through the likes of video links. And I think staff will still want somewhere to go. Maybe they'll go in the office 1 or 2 days a week, but not 5, because they'll still want that part of work. But I think what we should be thinking about is, well, where's the opportunities more broadly? If we're doing this, if we are enabling self-service with our clients through tech in many instances where we're not adding value, how do we get these people that are potentially working from home, not coming into the office? How are they engaging with people, with our clients? What do our clients expect in terms of how they're engaging? Because just because they're working from home doesn't mean that they can't meet with clients. Maybe clients would be preferred to meet up at their local cafe rather than come into the office and see someone face to face. So again, this is all really exciting, and I think is not only should it be exciting for business owners, but it's an exciting conversation to engage with your team and see where the real benefits have come through this whole experience, and how they will play not only into a new business model, but I think improved efficiency, greater profitability, and a more engaging client relationship as well.
Yeah, I really hope we don't end up bungee stretching this and sort of bouncing back too much. So Dom, quick last question. What do you reckon the next 5 years holds, or even the next 3 years, as we come out of this? More flexible work, more understanding of our businesses, but what are you guys seeing? What's your crystal ball say about the future of real estate and prop tech?
Yeah, look, I mean, the context around the environment for a period of time has been subscale, lack of efficiency, and people really, struggling to make that next step in the absence of equity and the ability to scale and consolidate, which we've seen continue to play out, and it's evidenced through the numbers. I think that consolidation agenda will continue to play out. I think 500 is still a hard place to be in terms of properties under management, albeit saying that with the accelerated push towards technology and automation, we'll see businesses benefit from the current experience to be more profitable than they had been pre-COVID. I think we need to adjust ourselves to a new normality of activity levels around sales volume. And with that, knowing that we're probably not going to get back to where we have been for a period of time, it will just continue to push this focus on understanding how I can make my business more efficient, how I can utilize tech to enable my business, how I can use it to improve my employee engagement, how I can use it to improve my client experience, and seeing how those actions lead to the results rather than being so focused on the results. So I think for me, that's what we'll see. So we will continue to see consolidation. Doesn't mean that there's not room for anyone that's not subscale. I think it's all then about a value proposition, bespoke value proposition in market and relevance to your specific geography or subset of the market. But I do think that we will continue to see people embrace technology with a greater propensity than we have done for a period of time, albeit that landscape will continue to be challenging around the number of participants and the number of solutions that come into the marketplace to solve for a myriad of problems. And that's the real focus around tech, is ensuring that you're investing and partnering with the right provider that's aligned with vision and strategy that's helping you to the long-term goals of your business.
Fantastic. Now, listen, I also understand that in your personal future, you are expecting your first baby soon. So congratulations on that.
Thank you. Yes, we're very close. We're literally 2 weeks out. So if I run away,
if it turns up on time, yeah,
run away from the camera right now, you'll know where I'm going. But no, it's all very exciting. It's we're contributing to the Corona generation. It's not quite the backdrop that I was expecting to be having a first child, but makes it all the more interesting. So yeah, exciting times ahead.
Well, at least you'll be able to stay home a bit more and you won't be expected to jump on a plane. I'm sure your wife will be grateful for that for the next 12 months. Dom, thank you so much. It's been fantastic to talk to you on the PropTech podcast.
Pleasure. Thanks, Carly.
So that was Domonic Thompson from Macquarie Bank. Now, you all know me and my love of data. This is one of my favourite real estate reports. I'm seriously like a kid at Christmas with this thing. It gives us such a clear and insightful picture of what the practice of real estate looks like across Australia. And I think it really needs to be more broadly understood and adopted by the industry. Now, if you're a prop tech and you want to understand the real estate industry both nationally and at a state level, don't go to the real estate institutes. They can't help you. They don't have the data. You want to check out the Macquarie Benchmark Report. And so I've included a link in the show notes. With each of these reports, the picture gets clearer and clearer that those businesses that use technology to improve the efficiency of their back office, to reduce their admin and costs, and which have a really strong vision and mission for their business, that have strong leaders and where their staff are really engaged, these are the most successful businesses. It's not about scripts and dialogues. It's actually about leadership. And what we see in this latest report is unarguable data that shows that the importance of automation and AI, the value of relationships both with customers and our staff, the importance of humble leadership, and how property management really needs to be the beating heart of every real estate business. So you can be the world's best agent at listing and selling, but if the business fundamentals in your agency are not working around these things or working on improving that stuff, you are going to be in a world of pain. So grab a copy of the report, and if you're an agent, see how your business compares. And if you're in tech, see how your innovation talks to one of these key themes. Now, if you've enjoyed this episode of the PropTech podcast, I would love you to tell your friends. Drop me a line or an email or say hello on LinkedIn or on my Facebook page. You can follow this podcast on Spotify, Google Podcasts, Anchor and Apple iTunes. I'd like to thank my audio support, Charlie Hollins and the fabulous Jill Escudero, and our sponsors, Smidge Wines, official wines of the PropTech community, Home Prezzo, turning property data into amazing marketing content, and of course, Direct Connect, making moving easy. So thanks everyone. Until next week, stay safe and keep on PropTeching.